Alrighty. Good morning, guys, and happy hump day. This is Taylor kicking things off for the October. Still quick on free room. All right, good to go. We should be on YouTube. All right, guys, we are rocking and rolling. So we'll jump in here, my friends. You got the S&P futures down about 1%. It's pretty good to me. You've got the NQ down closer to 2%. A little bit of a dip. Russell is flat. The Russell lives on its own little planet. And the Dow Jones. So a little bit of a dip here. It actually makes a little bit of sense. I think a dip makes sense considering Microsoft, after earnings, will gap down $20 towards the 230-ish range. So pretty big hit there. And then Google, my old pal Google, going to gap down to the tune of about $7 with an open around 97. Not too far off from the recent lows. So Google, the big Microsoft, big gaps down. That certainly puts a little pressure on the market. Even more so, guys, just structurally. We had a pretty mean rip here the last few days. The move takes you right into your daily 50. I think even if we're going to trade higher from here, which I'm of the opinion we do, makes a little bit of sense after your first hefty. You do pull back a little bit. So now the question, of course, is how does the market behave on the pullback? So a few things here, guys. The hourly chart, really good structure here. It really improved the structure of the hourly and taken it back into a nice uptrend. Back above the 21, back above the 50, positive moving average cross, and we even got some buy signals. So realistically, we're cranking up there at 38.70 for a little dip. Kind of like you were back here. Get a little bit too cooked. You got to head back to the gas station, which typically is going to be located around that 21 EMA. You refill and try to take it higher. So the structure of the hourly chart is, and it's good here, guys. It's all the hourly 50. The 2-hour chart, you got a pretty strong uptrend going here on the 2-hour chart. Pumping out buy signals, pretty good. Again, the thing is, the structure is good all the way down to the SMA. But it's pretty well behaved. And then the 4-hour, strong here, guys. So I think we needed a dip. But for now, my game plan is to try to buy the dip. I think good enough. Let's call it evidence in the short term to suggest we could see this market trade. Well, we're not going to put a price. Let's just say that for now, you got a few things pointing towards we could trade this market higher. And we'll find out how high is high. Here's a scoop, guys. As far as the pieces of finally seeing sign progress of the bulls here. So for starters, the VIX. The VIX kind of coming off of its high horse here. So we're finally trading under the 21 EMA. We have canceled out all the buy signals. And now you're bearish on the indicator on 30, the 15, and the 5. So that's all good for the bulls. HYG. Got some progress over here as well. We are back above the 21. We are back above previous support at $73. Man, it's raining hard out here in Massachusetts. Back above 73, back above the 21. You got your daily squeeze. And worth noting, the first positive histogram since the August rally. And all of a sudden, you got buy signals popping up here. So improvements in this, improvements in the HYD, and then probably the biggest of them all. Finally, some progress in the dollar. As far as the burned, we are under the 21. We're under the 50, which has been a really big level of support since January, February. Under the 21, under the 50. Daily squeeze with a negative histogram. We're fresh out of buy signals, and the 30, 15, and 5 go bearish. Signs of progress, guys. And now from here, you would want to see the continuation of that if you're looking for the market to trade higher. So if the go-to trend to be buying the dip. What we want to see is the dollar comes down further. And my initial target here is about 108. That would take the dollar towards the weekly, which food for thought there, even down to the weekly 21. This is still a really, really strong trend. But if we're trying to be bullish for a bit, we want the dollar lower. We want the volatility index lower. And we want to see HYG keep on grinding higher. That's the big question right now. Does it all turn into August, where we can actually rally for a few weeks? Or does it all turn out to be a bit more like, say, September? Trap the shorts and get a nice little rip, and everything kind of craps the bed. For now, guys, things pointing towards potentially might be a little bit more like August. So we've got progress in the P puzzle, the VIX, the dollar, HYG, and then as far as the structure of the market, we got progress here as well. You've got the S&Ps, 1, 2, 3, 3 closes in a row back above the 21 EMA. Yesterday, you actually saw the daily sell signal get canceled out. Above cancels out all the sell signals, 35th bullish. You throw into the mix here a daily squeeze of first program since the August rally. Some similarities. So good structure to these. The same going here for the Qs. Back above your daily 21 and a couple lower time frame buy signals. So now the key moving forward, guys, is whether or not the dips actually hold support and continue to behave like an uptrend. So a good example right now would be, a perfect example is actually the hourly chart. You rebuild the structure. The big 3 indicator tells us it's really strong with the green arrow. But more importantly, it's behaving like a trend. You put in a high. You put in a higher high. You put in a higher low. You put in a higher high and potential higher low. That's how an uptrend should behave. We're not in the uptrend. We're in the weekly trend. We're not in the daily uptrend. We have to continue to see that trend under the surface. Your 15s, your 5s, your 30 minutes, they got to lead the way here. So that's a game plan for now, guys. If these dips can hold, looking for a little bit more upside here in the short term. So to get you updated on my book of trades, let us see. We got long NVIDIA on Monday, and it's the same exact pattern. Close back above the 20. Positive shift in the histogram. Cancel out the sell signals. Lower time frames go bullish. That's the recipe. So for NVIDIA, we're looking for about 138, 140. And I think, guys, a name here, a dip to an hourly 21. As long as that behaves like an uptrend, your dip to an hourly 21 could be a pretty good buying opportunity. So we're liking NVIDIA. Of course, it helps here. Semiconductors are trying to make the same pattern unfold. Waiting on a few buy signals, but we're liking NVIDIA. Another name out here for some upside, Tesla. And again, you're looking for that structure under the surface. So Tesla's 5-minute chart's pretty solid. Pumping out the buy signal. The 15-minute chart behaves like an uptrend. Reversion to the mean. And let's see, 30-minute chart. That improves. Positive cross. And even the hourly here, as of yesterday's close, gets that positive cross. So I think a dip towards the hourly 21 on Tesla could be worth a shot. So we got some NVIDIA. We had some LNG, which we got rid of. Just kind of feels like dead money. A little bit too much of a chop fest with a market that just rallied 5 or 6%. So we are out of LNG, and then we had that short trade on Apple. We still have the trade. But we came into the week with a November expiration 150 call credit And of course, Apple begins to firm up here. We've got earnings tomorrow. So what we did was sold some 150 put credit spreads for the same expiration. So now we're short the 150 calls, we're short the 150 puts. And as far as trade management, guys, what that did, from one perspective, the risk of taking that short position to earnings is that we wake up on Friday and Apple's at 106. Well, at that point, I'm waking up to a max loss on that short. So the way the math worked out on the call credit spread, the max loss per contract was about $400. So by selling that put credit spread, I closer to like $100 per contract. So now if Friday Apple gaps up huge, instead of being about $400 per contract, the risk is now limited to about $100 per contract. Now the downside, of course, is that if Apple gaps down to $130 after earnings, well, now I'm not going to make a profit on the call credit spread because the put credit spread will eat it. So the way the math works out, huge gap up. I'm on the line for like $100 per contract. Same thing on a huge gap. The break-even on the trade is if we can roll into expiration, trading above 140 and below 154. So lines is my break-even. Above those two lines, or below those two lines, can only lose about $100 per contract. And the here, of course, would be we roll into trading around 150. Not what I'm planning for. I'm thinking a bit more. Let me play some defense. In a perfect world, we roll into earnings. We pin around 150. We head into expiration, rather. Get that pinner around 150, at which point both sides of that juicy premium. Oh, yeah, one more trade. Got longed exporting goods yesterday here in this daily squeeze. Looking to see if that can't take the top off a bit. So we're long exporting goods. We are long NVIDIA. We got long LNG. We got, I don't know what you would call it, an iron fly on Apple. I'm potentially looking to buy the dip a little bit more. S&Ps, QQQ, Tesla, NVIDIA. A couple of names I'm fancying right now. That's a major thing I think you want to be mindful of heading into today. And a big part of it is the nature of this market. When we rally to the tune of like $200 to $300 out of nowhere. So what does that do? Well, very quickly, that does rebuild the structure of your lower time frames. But also very quickly gets you a little bit too far above support. So the bulls, they start their road trip right back here. Right, they load the car up. They're pulling out of the driveway. They've been on the road for a few hundred miles. Right, that guy, you got to make a quick little detour, pull off the freeway, hit the gas station, refuel, and now from here, really, you can go another few hundred miles. If this is going to behave like a short-term uptrend, all got to be driven by the frames. So we'll see, guys. It is it's really strong. I know we're going to gap down a bit, but take into consideration Microsoft down $15-20 almost. That's Microsoft. Then my pal Google down 7 points. So the fact your S&Ps are just kind of hanging out in the hourly 21 tells me in the short term, pretty strong market. Which also leads me to believe conversation amongst friends. In the event you get some big old gap up in Amazon and Apple, we could see this market fly for a bit. Last thing I want to cover here, that's thinking, right? We're looking at 15 hourly charts. We're looking for some short-term upside. The most important thing to keep in Always bigger picture. None of the problems found here in the monthly chart have changed. Right. Monthly squeeze. First negative histogram since the 2008 financial crisis, and we're under the 21 EMA. It's going to take a while to pound full, but if they can't fix the issue, this is no more than a 15-minute or a 30-minute chart. Right? The squeeze is just a probabilities game. It's under the 21 with the negative histogram. Probabilities would suggest it wants to fire short. So they haven't done any of that. Then you jump to the weekly chart. None of the issues here have been fixed. Now, kudos to Sam, because Sam pointed this out, I think, in his Friday video, just to give you guys a sense of how much we could rally and still be in a technical downtrend. Right now, lower time frames is a series of highs and higher lows. Right, so if we can get that on a 30-minute chart or a 15-minute chart, there's a short-term uptrend. In terms of the downtrend, it's the opposite. In a downtrend, you're going to put in a low. You're going to put in a high. But the way a downtrend behaves is from there, you put in a lower low, and you can rally to the still put a high. So, right, all kind of starts back here. There's your high. There's your new low. There's your lower high. There's your lower low. Guys, from here, we could about 4150, 4200, which would be a hell of a target the week. And we're still continuing that weekly pattern of lower lows and lower highs. The dynamic shifts here on a time frame that actually matters if we begin to trend above 4,300. That's where we're at right now. This thing could rip face for like weeks. Does not change those bigger picture problems. So if we can be on top of our game here, guys, which that is the goal in a perfect world. And as always, don't ever marry any idea. So next time I'm with you guys, Thursday or Monday afternoon, if all the progress we discussed this morning is gonzo, guess who's not buying dip? Not going to marry any perfect world. We get a few more weeks of upside. White floor clean with that move. Really take home some cash. And then we can put on some awesome short. If we get up here to 4,100, next thing you know, we're selling 4,300 call credit spreads for December expiration. Sitting there and chilling on them. So short term versus big picture. Based on this weekly structure, this all says, hey, short any rally under the weekly 50. Under the weekly 50, you're still technically behaving like a downtrend. Lower lows, lower highs. So I'm not here to say that we're going to get there, but to have a sense of what could be possible and still fail to change a bigger picture. That is where we are at for now. So we'll see what's up. I'm going to jump on the mic in the gold room here in a few minutes. If y'all got any questions, anything you want to cover, let me take a quick swig of this protein shake and jump in, see what you guys have got. See what D have got. All right, Trader Momo. What's up, Trader Momo? Yeah, correct. The 21 EMA. As you'll see on my charts. The white one is the 21 EMA, and the orange fella is the 50 SMA. Hey, good morning. It's always good to see you. Silver. Got a couple gray hairs in my beard. They've been calling me the Silvox. Alex, it's become one of my favorite trades. You asked me a year ago what's favorite trades. It's the classic mastering the trade setup. Daily squeeze in a beautiful uptrend. Well, if we can find any of those, we're not in that market. But what I'm really digging as of late is, and Alex, it's kind of like the reversals thing, that everything beaten down, but you close above your daily 21, you cancel out every little sell signal, then things from the ground up go from neutral to bullish. Beautiful ups and even in the absence of that, can trigger a week or 2 weeks of ups. So let's take the move that we've seen here in the S&Ps. It's all a little bit similar here in silver. Silver is actually above the 50. But the point being, back above the 21, back above the 50, positive moving average cross. I got to imagine down here we got a bunch of sell signals. So we canceled all those out. Now you got a 50. So in the short term, that is the recipe to open the door for a bit more upside. So take that progress, and if that progress starts to disappear, we're back under the 50, we're back under the 21. Negative moving average crosses, lower time frame sell signals, invalidates the idea. Otherwise, in the short term, I do like it for a little. Hey, what's up, CJ? Good morning, Miss Jane, Larry, CJ, Russ, Cheryl, and Tony. All right, guys, we'll jump over here to YouTube. Miss Janice, good to see you. Yeah, where you been, Miss Janice? Been wondering where you been. I take morning attendance. I say, where's my friend Miss Janice lately? What's up, Terry? My man Jace, good to see you. Okay, the market is going to collapse at the open. Easy money on the short side for a flush. Possibly, my friend. The three things the market could do. That is one of the three. You know, my thinking here is just structure. Down 1% into the open. But for now, I got an hour piece here with some buy signals above the 50. So for me, where I would think it's going to get ugly today is if they start blowing structure. Right? Take down the hourly. Well, if you take down the hourly, then the next man standing is the 2 hour. Take out the 2 hour, well, then all you kind of got is that 4 hour. They take out the 4 hour. Well, at that point, it's probably a wrap on the idea of short-term upside. They take out the 4 hour chart. They take it back under the daily 21. All process has been given back. Hey, what's up, G? Good morning. Good to see you. Jason, I think that's not a terrible idea. Apple on Thursday. We got Amazon Thursday. I think tonight we got the stock formerly known as Facebook. What's today? Yeah, we got Meta. Meta World Peace tonight. So we'll see what's up with that bad boy. Hey, good morning, Mr. Rocky. Good to see you. My man Anders. Hourly 100. That'd be right up TG's. And Theodore Gordon. That would be right up his alley. Let me see. I'll change my 50 to a 200. Come to find out, TG's real name is actually not Theodore Gordon. A dip to the hourly 200. It'd be a pretty big flush from here, that's for sure. It would be a nice spot to see, where do we go from there. All things possible, guys. I think 2020 was a week by week market. This all feels a bit more like an hour by hour market. You think of some of the intraday moves I forget exactly which day it was, but it was Monday, or it was one day last week. We open up where 40 minutes later, the market actually goes up. Then we're down 0.5%, and I think we finished that day up like 2%. It's like got a whole lot going on. Teddy Graham. The world name is real name is. It's open for speculation. But all right, guys, thank you for all your questions this morning. I'm gonna cut you loose. I'm gonna jump in the gold room. I'll probably just start things this morning. Make sure everybody's on their toes. So I'll jump on the mic in the options room. Anyways, that will market prep this week. So here on the YouTube channel, Chandler should be live on Friday. And of course, guys, I'll be back with you on Monday. So have a good week, my friends. I always appreciate your time, especially before the market opens. And as always, I hope you found the analysis helpful. So have a good day, trade safe, take your dog for a minimum of 2 walks, and I'll see you guys soon. Adios.